Thursday, February 5th, 2026, and I am doing this show in the middle of the market. It hasn't closed today, but like we talked about yesterday and the day before, the timing is important, and I really feel like there's some shifting going on, and I want to tell you what I'm seeing and what I'm feeling. So let me start with Google earnings, which reported last night after the bell, and they smashed it. They killed it on, they beat on revenue, beat on earnings. They raised their guidance. Their cloud revenue was fantastic. Their search revenue was fantastic. They did take their capital expenditure, what they're going to spend, and they raised it very significantly up to for this year 2026 up to $185 billion they're going to spend. But the way the market is reading this right now, Google is down 3%. It was down further earlier in the morning, but the what the theme one of the themes of this show is price action. We have to listen to what the market is saying. And as they say on Wall Street, don't fight the tape. And what the tape is saying right now is this is the most loved stock of the largest cap tech stocks, technology stocks. Google right now has the best momentum, the best sentiment. They smashed it on earnings and business, and the stock is selling off. So this is a key indicator for me. When something has great numbers and great momentum and sentiment, but the price action is poor, then absolutely that makes me sit up and pay attention. So I'm not going to, this isn't about scare. This is about being realistic. And what I see right now is this. I see a risk off market. Okay. That means money off, risk off the market. And the VIX, we've talked about the fear index, the VIX index, that is now over 20. And since Christmas, it's gone up more than 60%. It was down in the 13s and now it's up over 20. And I can easily see it staying here and maybe raising even further, but still a 60% increase in just over, let's say 6 weeks or so. So that's significant. And again, that measures the fear based on, we've talked about this before, the what investors seek going forward in the next month for the S&P 500. Also, gold is down, which is a classic when the market gets scared. That's a safety trade, but that is still in the red. Silver is way down this morning. Bitcoin is absolutely, I won't say in free fall, but the last I checked, it was in the high 60,000s. It continues to go down. Software, as we talked about yesterday, is being seen in a very negative light. People are convinced that artificial intelligence is going to gobble it up. And I'll talk more about my trades on ServiceNow and Salesforce in just a bit. Um, we talked about the price action in Google. That also follows last week's report from Microsoft, which they had great numbers as well, and their stock continues to sell off. So remember, these are the market leaders. These were the foundation underneath the building for the last couple of years. And actually, Microsoft was downgraded this morning from Stifel, which is a highly regarded analyst firm. And so anyhow, the analyst there is well thought of, and that firm is as well. So they downgraded Microsoft and dropped their price expectation pretty significantly. And the market overall, we've talked about this since late October, it has been flat, hasn't done anything. So from a technical indicator, you've got this line since October, and the market keeps trying to hit, go up, and it keeps hitting its head in a general range. There are only so many times when the market hits its head before it starts pulling back. And the very simple explanation of that is simply that you've got buyers that are trying to buy and see a breakthrough. And when they get rejected and rejected, they stop buying. And then the sellers can take over. So that's what I see there. Again, not a scare, just being realistic. Labor wise, I just want to point out that January job layoffs in January were up 100% year over year from 2025. And the January layoffs are at the highest since the post Great Financial Crisis in 2009, right after the GFC in 2009. These are the highest numbers since then. So some real, something to watch in terms of labor. Because we're always looking out for the indicators like labor and inflation that might lead to some sort of recession, because that is very important to look out for, and we'll talk about that. So, look, I talked about the last couple of days. I've been testing the market with ServiceNow and Salesforce. I absolutely know that these are incredible companies, and they've got that great mode, and they've got the full tech stack, and they are completely at the front line of implementing artificial intelligence. But that being said, this morning, as you know, yesterday I bought a little bit and it came up in the pre-market, but then I saw some about 5 a.m., 8 a.m. Eastern time, 5 a.m. Pacific. I saw some drastic drop in price action after the European Central Bank announced that they were holding rates steady, and it just seemed like a dislocation. And then weak price action followed. And as we talked about, you have to listen to the market. So I'm not taking any chances. I liquidated both of those because overall, I see so many concerns in the market. So that is what I did with those. Again, great fundamentals, great numbers for those businesses, but terrible sentiment for the software sector. And when we get great numbers and we get bad price action, that's when we don't fight the tape, as they say. So I put down a phrase here that says, the run's been fun, okay? And this isn't anything drastic, because we don't make drastic decisions of panic and euphoria. I stay away from all of that, okay? But the run has been fun. And we've had a great run in semiconductors over the last couple of years. I see issues there with supply constraints. Businesses are sold out with their semiconductors. Taiwan Semiconductor manufactures over 90% of the advanced AI chips and small, teeny tiny nanometer chips in the world, and they're building more facilities, but supply is limited, demand is high. Memory prices right now for those servers, computers, the actual memory is just skyrocketing because they cannot build enough of that. So supply is limited. You know how I feel about energy being a pinch point of the artificial intelligence play. And so the semiconductors have just stalled, and I really don't see that upward momentum, because I see expenses increasing and no supply again not coming back online. So, and then also you've got things like the U.S. government imposing licenses and licensing fees and permissions that give a delay as far as delivery. And so the semiconductors and large cap tech have been leading this bull market over the last couple of years. But that really combined with the questioning of, is AI going to pay off? All the money that these huge companies are spending, the huge money that they're spending, is that going to pay off? And, with that capital expenditure of the biggest companies like Google, like Microsoft, when they spend all of that money, that changes their balance sheet and compresses their margin. Okay, their profit margin very simply goes, shrinks, because they've got so much more in expenses. So we've talked about that since last year, about how the largest companies that have been leading us, their price to earnings is going to shrink, their margins are going to shrink, and combine that with the artificial intelligence questions and doubts and the leadership, the underpinning of what has been this bull market over the last 2-3 years is really shaking around. It's wavering, and we've always tested out other parts of the market over the last specifically 2 years and run back to those largest companies because we knew that they were solid, that they were throwing off so much free cash flow. But now that that is in question, I see in the tape, in the price action, that the market is unsure about that, that those specific, that sector and those specific stocks have given up their leadership. And so now the market is really uncertain. We don't have anything else to take its place for right now. So I'm going to leave things there, and we've sort of lost that home base, the assurity that we can run back to and go back to Google or Apple or Nvidia and absolutely feel like our money is safe there. The tape, the volume, everything is telling us that that has absolutely changed. So I am being 100% careful right now. I've liquidated my positions in those two trades we talked about, and I am double risk off on the market. I am in cash and some other interest bearing, you know, gain a little bit of interest on the side, but now is a time not to press bets. In my mind, now is a time to sit back and watch what happens with the market. So there you go, guys. I hope that's good. I hope there are some of you that are able to watch during the day today and make use of this if that's the case. As always, I would love to hear from you if you want to drop a comment or a question. You've also got my email, wallstreetwman@gmail. And pretty soon I'm going to compile some questions and just sort of, throw that in as a segment too. Like, here are the questions and these are my thoughts. So there you go, guys. Have a great Thursday. And as we always talked about, be safe, okay? Cheers.